Right, everybody. I have not been posting for a while, and though nothing really nefarious has been happening to me, I have become somewhat disillusioned with regard to trading options. Um, we often hear that the market can do one of three things, right? It can go up, go down, or go sideways, right? And then in my course, the course that not the course that I run, but the course that I took in order to learn how to trade, um, the overarching idea was that if you have one particular way that the market can move, which is sideways, and you don't lose money, you just stay neutral, and then you have a scenario where you gain money, that's when the price goes up. And then one scenario where you lose money, that's when the price goes down. So there's 66% chance that you don't lose money at least. But with options, that's not quite true. Because if the price stays exactly where it is and you hold your option while that price is doing that, and you are holding a zero DTE option, then you're actually going to lose money if it goes sideways. So at this point, there is a 33% chance of you gaining money and a 66% chance of you losing money. In addition to that, look at what, um, when you look at, your stop losses, you say if your stop went, if the price went straight to your stop loss within the first 1 minute candle, then uh, you would lose, say, at 30 cents away from the stop, you'll lose 15 cents on options value. But there are many times when you want to hold to see if the price is going to go up while it's kind of meandering. Well, if you do that, then you lose value in the stock, and you lose value in the option, and therefore you lose value in your position. So even if it does eventually go to your take profit, you will not have earned as much money as you would have expected to earn um, once that got to your take profit area. So there's that, right? Um, and then there is so that's the what you call it, the theta, time decay, and then you have the VIX, which is the fear index, a volatility index, or whatever you want to call it, where the price of your options are really high compared to um, compared to when the index is low, and that makes it hard to trade. Now, it's not much you can do about candle sizes and whatnot, but the the difficulty in trading, it kind of attaches because it costs way more to do that. And if you're on a cash account, then you can't really trade as much as you would or as many times as you would if you are one that takes multiple trades a day than you would otherwise. I hope that makes sense. Um, the the way around that for options is first options are leverage more so than options. And when you buy an option, then the most money that you can lose is the money that you put into that option. Futures, however, you can lose way more than what you intend to put in. However, options also move more slowly, I guess the way is how I will call it. And if your options gets to your stop loss, rather it closes past your stop or not, well, I say your mine. So for me, the way I do is I put a bracket order in. I have a stop set in the system, and if the price gets down to that stop, it exits the trade. There will be no situations where I'm losing more money than I actually possess in my account. So I'm not really worried about that. Sorry about that. Yeah. Anyway, and you don't have to worry about the idea that you're going to run out of capital on trading. The only way you run out of capital when you're trading is if you lose all your money. So that when I say that, it's like when you buy a $600 worth of option. If you only have $600 in your account, then you can only do that once. But with futures, you can do it as many times as you want to, so long as you don't lose all your money on a trade. Let's see here. Right. So I decided to stop trading options and start trading futures. Now, my approach is hybridized, right? I am still going to be charting on the SPY, but when I make entries, it's going to be on the ES instead of the options. Um, I figured out some things I need to set up today. This is your ES chart. This is the ES active trader. This is the ES 5 minute chart so that I can make sure that I'm selecting the correct take profits and the correct stop loss. And this is still the 5 day, 5 minute SPY chart. This chart gets used the least, and these two charts only get used while I'm in a trade. So, with that being said, I want to show y'all the first trade that I took um, as a futures trader. Okay. Now, normally I do videos, but I was like really just learning. So, learning how to navigate the whole futures thing and all that stuff. So, I had to think about starting the video. I'm going to be doing that tomorrow. All right. So this one was well, I said short from the major demand zone, but I actually meant long. So obviously the language. My target level was here. And my stop loss was this white line here. The price had pushed down dramatically, as you see here, these huge candles. And then you had a huge candle come back, forming this zone. And then the tap zone reversal confirmation and entry. Now, this wasn't the best probably setup. You had a reversal candle that was pretty much below the zone candle. Although this closed above the reversal candle, it also kind of rejected from this area. But this candle became extremely decisive, so I went ahead and got in. This is the kind of trade I probably would have passed on had I been in the options. If I had been playing with options, because this right here signified the possible choppiness. But when since I'm using futures, I don't have to worry about choppiness. And at the same time, I was actually watching this when it's happened, and I saw where the price got all the way up to here. Okay, and um, I saw it pop into my price range, my limit order area, without executing a few times, and I was thinking to myself, well, I'm going to trust the process. I move my stop loss up to one tick um, above entry. One tick, by the way, is worth $12.50. and with the cost of the trade being $4.50, one tick is enough to cover my commissions. Um, so I just waited, and then it turned around and it went to my take profit. This is exactly why I like these, I like the futures, because I don't have to worry about, well, you had hit your target, but then you got 1 minute, 2 minute, 3 minutes. You're probably looking at something like 1 or 2 cents of time decay. But I don't have to worry about that because the futures don't have time decay like that. They do expire, but they don't expire all that often. And when one is about to expire, there's another one out there that is, that is months from expiring. But they both cost the same. And even if they didn't, the well, let's just be clear, they're the same. So it is what it is. Um, so this trade netted me. Bring up my trade. It's going to be a work in progress. Let me bring up my trade journal. So this trade basically made me $158, which is 3 points. It's it's $50 a point, 4 points per tick, and I made sure I got the commissions taken out taken out of the trade score, just like I did with the options. So this is my first one in the sim. I'm going to do sim for two more, well, for this week and next week. Um, I might do it for longer than that now that I think about it. But yeah, that's it. I was just letting everybody know I have switched to futures and I am no longer doing options, but I am still trading. See you next time.